Hi, this is Randy Finney with the Right Side of the Chart, and this is a mid-session update for Monday, August 23rd, 2021. We'll start out, as usual, with a brief update on the broad markets, and we'll look at do an update on crude. Definitely some levels to mention there, or developments, I should say. Coal stocks, quick update there. Nothing new yet, but I am closely monitoring that sector. I want to do an update on live cattle and lean hogs and coffee. I think that'll be it, time permitting, maybe natural gas and lumber, a couple other things I've been watching lately. Yeah, I'll try to squeeze those two in there, and that should be it. So we'll hopefully keep this video under 20 minutes here. So nothing new in the broad markets. We're still waiting for a break below the support zones on QQQ and SPY. That's the bottom purple levels, purple lines, I should say, the lowermost lines on both the QQQ and SPY 60-minute charts. So what did happen today is we popped, we closed on Friday right there at that minor downtrend line. We popped it today. So just like in football, when a team gets a first down, they move the first down markers, and we'll move the line here, and that gives us that extends the divergences. They're getting stretched. You know what I mean by that is if we go up, we continue to go up much more, we're not going to have negative divergence here on the 60-minute chart. So it is there now, but again, we don't have anything closely resembling a sell signal at this point in time. We're still kind of a little bit. That's also what we did today when we popped that minor downtrend line. We did pop the upside of that trading range. So again, we watch that. If it's a legitimate breakout, we're going to build on it, and we're going to take out those divergences down there. If not, what's quite often the case, and it's been this market's MO for, gosh, it seems like years now. Any type of, after a few months of putting in a high, you have a period of consolidation correction, and then you go up, you pop, make a marginal new high if it's a divergent high, and then there's usually a reversal. But right now, we don't have anything. Again, if anything else, we have a buy signal today because we popped that minor downtrend line in the previous highs. So we need to see a sell signal, and again, I told you where that would come on a break below the support zone. And near term, you could probably put a little trend line here. It's not the most well defined, but that could do the trick as well, a little minor uptrend line. So that's what QQQ looks like. And on the S&P 500, we have the SPY 60-minute chart. Again, first down for the bulls, so we just drag that divergence line up, extend the divergences at this point in time. They're still intact, and again, until and unless we break the bottom of those support zones, about 435.90 or so on SPY, and those levels we just had on QQQ, we don't have a sell signal, but sell signals are pending, so we'll see if we get those anytime soon. It would take quite a reversal, probably take well, who knows? You can't say a couple days. Big day in the market. We haven't seen that in a while. Volatility usually needs to start spiking before you get those 3% plus down days. But what I'm doing is measuring, and we're about 2.6% above that bottom of that support zone right now in SPY. So we need to, at least drop that much just to get down there again. All right, let's move on where there are some things which are actionable right now, and that would be crude oil. Crude oil, again, by all the metrics I track, is in a near-term downtrend, ran into significant resistance recently on the long-term chart, and this is a beautiful, in my opinion, beautiful objective short entry here. If you trade crude, I don't need to tell you this, but it's going to be a volatile commodity, I should say. You can trade the ETNs, use SCO. That's an official trade right now, a short trade. You can go with USO, which is an ETN as well, non-leverage. You can short that, and of course you can trade crude futures. And these are the zigs and zags. It's a volatile commodity, just like natural gas. And so we have a nice update today, about 5.41%. But look at this, right into that downtrend line from last week, as well as that 66.05. This, to me, back then was a big level here. It was a support zone, and support, once broken, becomes resistance. So now that's a former support zone becomes a resistance zone, RZ, we'll call it, and that's it, 66. So you have a rally back into dual resistance levels while in a confirmed near-term downtrend. Again, a series of lower highs and lower lows so far, which is by definition that's a downtrend. So there it is. So it's no guarantees it works out, but I think this is a very objective shorting op with a stop somewhat above for the next leg down in crude oil. We had small little 60-minute divergences that helped or the catalyst for this rally. But again, the case has been made, longer term case for a swing or trend short in crude. And so if you are of the same mindset as me, you need to or want to use these, take advantage of these rips. They sell, in a downtrend, cover the dips and sell or short the rips. That's what you want to do. It's just basically like a uptrend in reverse, where in an uptrend you buy the dips and sell the rips. If again actively trading, you define whether you're a trend trader, swing trader, or an active swing trader, or a less active swing trader, and then that will help formulate how you want to trade crude. And so the proxy for a typical swing or trend trader is this SCO. We put in the divergent low recently. Again, case is still very much intact for more downside in crude. And this is a two-time inverse, two-time short inverse ETN, and that's it. So we hit the first target on Friday. Actually, we hit the first target on Thursday. We took it out on Friday, but again, this is a daily chart. This is also a leverage ETF, so you always want to kind of align this. From this chart alone, that was bullish that we took it out, but we didn't hold it. So let's just take it for what it was. We had 1 day above the T1 level. It should open the door for more upside, but again, what's going on in the 60-minute charts? We got that bounce, that divergent low, and so those divergences played out. But you can see this, just like I showed you, we were rallying into that a downtrend line on crude futures. This is a perfect pullback to this uptrend line in SCO. So again, I want to reiterate a very objective level to add on to or cycle back in. If you did take, let's say on Friday, you took profits, or Thursday I should say, when T1 was hit, great time. You can buy back in right now. If you book profits around T1, you could buy back in today around almost 10% cheaper, better prices. Okay, and moving on. With crude popping today, having a counter trend rally, that's going to help the coal stocks, but they are still just, in my opinion, beautiful setups. Remember, the majority of these stocks that I covered in that video last week are still setups, meaning they need to break below these bearish rising wedge patterns or any other uptrend lines or price horizontal support levels they have. And BTU, the video was done on Thursday. There it is. There's Friday. We held that trend line and up today, and we're up towards the top of the wedge. Still divergences in place, and I'm not going to spend a lot of time on them. I'm just going to show you that the majorities again are untriggered. So as far as the sector as a whole, even though they eliminated, there used to be a coal ETF, KOL, which I believe stopped trading last year. We still have, you want to see if you're trading even a single one of these, you want to see the majority breaking down. It helps put the odds in your favor. So right now we have another test of the trend line, which also helps to validate that trend line. So all the better when these trend lines start to go. So there's ARLP. I started out with BTU, HCC, Warrior Coal. This one's actually up against a pretty nice resistance level, but there's your trend line way down there below. And Arch Coal, or Arch Resources, another bounce off the trend line. We were trading at that trend line on Thursday when I did the video, bounced off it, hit it, bounced, and we're still above trend. So that's the same story. I could go through them all. And like I said, a couple of them have broken down, like CEIX. That one's coming in for a back test. So while you could certainly take a shot on the back test, the problem is you need to see the majority of those other ones that I just covered break down, or this back test could, let's say we could back test for a while. Number one, that sucks. If you short here and you back test for, let's say, 3 weeks, well, you're going against the trade. Or you could, of course, regain the trend line if the others don't break down. However, if we can back test, let's say later this week, we're still back testing and we get sell signals on another 2 or 3, better, 4 or 5 of those other coal stocks, all the better for this one. And I'd put very good odds, if that happens, if we get some others breaking down, of at least this first target being hit. And right now that's 26%. So again, the risk reward on these trades are very high. The reward potential as well as the downside. But again, overall, we do not have a sell signal on the sector because there's still too many above those trend lines. Only a couple breaking down. There's SCX, beautiful trend line. Look at that, and price support. hit it the other day. So these are again setups. I'll just hit on the rest since I did it. METC, NRP broke down and still below. So you're going to have a couple of these back testing this week, possibly next. So we'll be on the lookout for the rest of the not all of them, but the majority of those others breaking down. And that is, I believe that's it. Yep, that's it. All right, next up, let's look at livestock futures, and that would be lean hogs right here. And we broke out. It's not very impulsive, but I think it'll run. I think this one will take off. Again, that's not what you want to see on a breakout. You want to see impulsive follow through, but it is a breakout. There's your downtrend line, right? What's even better, besides the fact this one still has a nice pattern, big divergences, is that live cattle has broken out and taken off. I mentioned that one in a triangle pattern last week with a buy signal to come on a pop above the triangle pattern, and there it is. Boom, nice lift today. We're up 2.56%, and this is what you want to see on a breakout. It's impulsive. Now the thing is, these guys tend to run together. They're both protein sources, so it's going to be unusual to see live cattle continue to run and not see hogs play a game of catch up. They do, times march to their own drumbeat, but they also overall tend to kind of, the bigger picture, they tend to ebb and flow together. I'm talking about the prices and trends on cattle and hogs. And those of you that don't trade futures, I threw out cow. Cow is an ETN that holds hogs and cattle. And you have that last recent tag at the trend line there. You have resistance right here at 39.13. It'll probably be taken out if and when we get some more upside on both live cattle and lean hogs. And then yeah, it's an old target, but let's say up there about 44.36. So it'll be your next trend or swing target. And coffee. You can trade via the ETN Joe. This chart is not as clear, so I don't have the highest convictions on this one right now. It's been a little gappy lately, but like everything or all other commodities, it's in an uptrend, make no mistake about it. It's been trending higher, and futures a little bit better visibility right now. We have a trend line that we pulled back to. Let me cue up that chart here for you. KC, if I can find it down below. I know I've got it here somewhere. There it is, KC. Again, I wouldn't call it a screaming buy, and I can move this line around. Let me do that a little bit. Let me take that line down. And it's enough that's valid. We have quite a few reactions back here and one more reaction here. And what's nice about if you take a long here at the trend line, again, it's not a screaming buy in my opinion, but it's worth a shot if you're want to have some exposure to commodities or you're just looking for trade ideas. But then again, you have pretty good support here, about 174.92 right there, just below. You'd want to stop under there, targeting at least that 198 level, and if not more. And again, you had it's not shown here, lines went away, but you had some divergence to that recent high. Had a nice rally there, and that's coffee. And nat gas, told you I'd do an update. Mentioned on Friday that although we did hold that support and we regained the trend line, I thought it was maybe a bounce trade there, which a quick trade, but my convictions weren't very high. In other words, sometimes you'll take out a trend like that. It's very bullish when you have a little whipsaw down through the trend line, but I'm kind of standing aside watching it. No, I'm doing an update because I know a lot of you are probably in this trade. Natural gas is one of the most volatile commodities, so you can make some good money in quick order, or if it goes against you, you can lose a lot in quick order. So just be careful. And the reason I wanted to update it, we're already back to this trend line. So instead of this being very bullish so far, we definitely had a reversal. There's been no follow-through buying. We're already testing the trend line. We've had 2 tests since then. And a break of that trend line, and of course any or all of these horizontal support levels, especially 3,743. And keep in mind we're coming off that divergent high there, could take us down all the way here. So there's a potential swing target and trade it as you want. I'm still kind of holding off on this one right now. Don't have the highest convictions, but I could say if you want to take a shot on a break of the trend line and then maybe take it up to full position on a break under 3,743 and targeting at least 357 and possibly more. You could either cover there, or if it starts to pan out and you get close, lower your stops down and let it run to see if you can get more out of it. And lumber still looks good. Remember, it's had a heck of a correction, and that's because it is coming off its biggest rally, I believe, ever. And it's still very much in a bull trend. I've showed you that on the longer-term daily charts. This is a 30-minute chart that I've been kind of highlighting recently, and we still have the same divergences. I've been talking about these positive divergences for a while. Momentum has slowed. You can see the indicators on the daily turning up, reflecting that. And recently we took out this minor downtrend line, which is a falling wedge pattern there. Again, with some pretty big divergences in place, and even along the way, even if it's just you want to say we're in a bear market, that there's going to be more downside. Again, you can say, wow, 70% drop, that's a bear market. But also when you look at the bigger picture, remember, lumber is an extremely volatile commodity, and I talk about it often. It doesn't consolidate much. It's either going up or it's going down. There's hardly any in-betweens in it. And so again, the case could be made on an oversold basis on the daily chart. Divergences there as well, big divergences on the daily chart, and these 30-minute divergences, and the breakout recently, we're starting to move up. So here's your levels I'm going to give you real quick. I wouldn't even call this a target. I could probably revamp these targets. I've added lines here, but I'd say this is the first resistance, and if that's taken out, that's going to be the catalyst up here to this next one here. So whether you want to call that T1 or this T1, I'm going to give you the levels. 5, and these are actual resistance levels, roughly. Round them off. 521.50, 567.50. We'll call that 600. It's really just under 599.68 is where I have it. And then 650. And then ultimately, I think we could work our way at minimum up here, probably quite a bit more. I still have this second and third target from this last trade right here when we broke out there. And so those were your previous targets. But I just wanted to mention all these levels are pretty decent resistance levels that have formed since. And so you can target any or all of those for near-term price targets. And again, to the best of my knowledge, there at least in the past, there hasn't been any ETNs that track lumber futures directly. The closest thing you can get are these ETFs, wood and cut, which hold forestry and timber companies, make paper products, things like that, or lumber. They broke down around the time that lumber futures did, but they haven't corrected nearly as much. More of a sideways trend. Now remember, these are equities. These are stocks. The stock market's holding up, and although lumber futures fell, they're hanging in there, and that would also indicate that maybe this sell-off in lumber, that 70% drop, is viewed by most is going to be as being temporary and fleeting, and we'll probably see a rebound in prices. That's what I believe. I think the inflation trade is still very well and alive. It's taken a little breather lately. We had big moves off the bottom, but again, you haven't seen these forestry companies collapse yet. They're holding up, and that's wood, and here's cut. So are they trade ideas? And I much prefer lumber, pure play on lumber futures, because they're beat down. I just want to show you these charts. Overall, they broke trend, and they've been consolidating, but I often talk about this. Prices can correct in one of two ways. They can correct in price, which is a drop, that's a correction, or in time. And this is mostly time. It's a little bit of a drop since the breakdown above the trend line, but it's been mostly correction in time right there. Okay, promised a short video. We're right at the 19-minute mark, so I'm going to wrap it up here and get it out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.